working all flipping weekend, but you know, standard procedure.
Yeah.
Yeah, but no. What you guys saying about the calendar?
We've only got two red folders this week, 2 p.m. and 8:30.
Can you share screen and break it down for us?
Yeah, cool. 1 second.
I want to ask also, do you guys see that as a problem, us having less Red Full News events?
I don't see it as a problem too much. It just means there's less volume throughout the days that don't have red folders.
Okay. Okay, I'm gonna add on to that. I just want to see how you're gonna break this down, and then yeah, big man. I don't know if you're
Okay,
on mobile
yeah.
or your monitor's rotated or
I'll share in 1 second.
what's my screen.
Isn't this like something that is a bit,
Hmm.
wouldn't say controversial, but it can help you and not help you at the same time?
The
If you
calendar.
don't have, yeah,
Yeah. You basically need to be able to identify its initial narrative, right? And what it's trying to tell you. It's like already like a concept already on its own because there's a lot that goes into it. It's just that with me, I try to not over flood people with like information because the minute you know everything, you're not gonna be doing anything, you know. But I would say, in regards to the calendar, you also need to know when not to get involved because I think most people also have the misconception that every Red Folder News event is equals to volatility, you know, and that's not the case. It's like even this FOMC meeting minutes, the chances of it having a lot of volume is extremely low, you know? Wait.
The screen better.
Yes, it's pretty good, big man. Wait, where you guys hearing me from? Oh, okay. But yeah, big man, just break it
Go
down
ahead.
for us. Let's see.
Alright, so yeah, so Monday, Tuesday, I would regard these days as low volume days.
Yeah.
If I was to trade these days, I'd look to trade the 9:30. But yeah, I'd expect low volume for those 2 days.
Yeah.
Wednesday, we have news at 2 p.m., but it's not FMOC,
Yeah.
the normal one, it's the meetings. So I'm not sure about the influence of this
Yeah.
red folder news. Thursday, the most influential time would be 8:30.
Yeah.
I'd regard this day as a high volume day. So I'd look to trade 8:30, then 9:30 as a continuation. Then Friday, I would regard as a high probability day purely because we had news the previous day.
Okay.
So I'd trade 9:30 Friday.
Okay, perfectos. So, which specific day would you say is the highest probability this coming week?
Thursday.
Thursday, because of unemployment claims.
Yeah.
And what would you say is your
Yeah.
experience based on unemployment claims day in regards to volatility?
Sometimes there's volume, sometimes there's not.
So it's kind of like Russian roulette in a way.
Kinda, yeah.
Okay. And then in regards to Wednesday, 2 p.m., what's your experience based on FOMC meeting minutes?
Kind of the same. It's not a lot of volume. It's
That's
rare
fine.
when there is.
Okay. So Nathan, one thing you need to remember about like specific weeks like this, right? Let's say you are a trader that only looks to trade Red Folder News events, right? This week you would not be touching the markets completely because they are not going to be dominating, right? Unless it's like unscheduled events outside the economic calendar, you know, stock events or global things, you understand?
You're
These,
saying based off the title.
sorry?
Saying based off the title. Are you saying based off the title of the news driver?
Exactly.
Isn't it mean? Okay, got you.
And also based on the amount of events we have within the week. You understand? Can you see that we have two Red Folder News events, right? And they tend to be not as significant as others. You understand? What I mean by that is you will pretty much literally not even see the footprint within the markets, right? And also what I mean by that is they're just gonna look like every other candlestick, right? It's not you're not gonna be getting the NFP, CPI type of reaction in regards to these events, especially FOMC meeting minutes, right? You're not gonna see anything. The best thing you can
Yeah.
see out of this, right, is extended volatility, whereby now you get a session volatility for the PM session. You understand? But also that's gonna be like a also like a Russian roulette thing. You're not gonna be it's not gonna be easy identifying that volatility. You understand? And
Yeah, would you
also,
say it's still best?
mm-hmm,
Would you say it's still best to trade 9:30?
yeah,
This won't mess up 9:30.
yeah.
All right.
I would say pretty much this whole entire week, right? It's the type of weeks where 9:30 trading tends to excel. You know, you're gonna get two to maybe three or maybe even four good 9:30 setups during weeks like this. Why? Because they are not being overshadowed or overlapped with red folder news events or executive red folder news events. You understand? It's not like could you try to go to last week's calendar? Can you see how many red folder news events there are? Let's say we did not have NFP, right, and it was just replaced with any other red folder news event, right? Because we know NFP is pretty influential, right? You would pretty much say, okay, I don't really know, or me personally, I would say, okay, we have way too many overlapping red folder news events, and that influence, right, from a volatility perspective, is not going to be the easiest to identify. Out of all of this, right, big man, out of all the days included here, right, like just exclude Friday, which day would you say would be the highest probability to trade if we do not have NFP? Meaning we just had average hour earnings and unemployment. Nah, it's not unemployment claims. Yeah,
So without the red folders,
yeah.
would it just be Monday 9:30?
No, I mean, out of this whole entire day, Monday, Tuesday, Wednesday, and Thursday, right? We're just gonna pretend that NFP is not there, meaning all the other red folder news events are there, right? Even for Thursday, like your ISM service, PMI, right? And average hourly earnings, it's there, right?
Oh, so Thursday.
But NFP is not there. Which one between the red folder news events of Tuesday, the red folder news events of Wednesday, and the red folder news events of Thursday would you say are most significant? To better say,
Wednesday.
which day would you say would be the better day to trade?
It'll be Wednesday.
It'll be Wednesday. Why Wednesday?
It's only got one red folder
Okay.
and one new show.
Okay, and then what would be the problem with Thursday? I mean Tuesday,
There's too many.
and at different times. Can you see that?
Yeah, 9:30 and 10.
Okay, and then Thursday
There's four.
would
Or
pretty
no, there's five.
so okay with Thursday would pretty much say it's the same thing. We have red folder news events at 8:30 and 10 a.m. right?
Yeah.
So now that means for that specific day we have three potential volume injections, scheduled ones, right? That would be 8:30, 9:30, and then 10 a.m. right? Can you see why that would become problematic in regards to which specific one you're gonna trade? Because you don't know which one's gonna be most significant. Okay, so whenever you see calendars like this, right? Whenever you see a lot of red folder news events, right? That should automatically be a hint for you that okay, 8:30 has the highest probability of being the lowest probable one to trade, right? And if I'm only a trader that trades 8, I mean, no, I meant 9:30. 9:30 has the lowest probability of being the highest probability one to trade. Meaning, you have 8:30 red folder news events. You have 9:30 market open, and then you have 10 a.m. red folder news event, right? You just automatically tell yourself, okay, 9:30 is probably going to be problematic. Why? Because I don't know if there's going to be volatility at 8:30 and at 10 a.m., right? If I don't trade 8:30 news events, because at times they can tend to be volatile, I can say, okay, I'll let 8:30 slide, meaning I'm not going to get involved. Let it move. If it moves without me, that's a hint for me, because if it's highly exaggerated, right? Whenever you see a wait for the news event that comes before the market open, right? If it's highly volatile, right, that's going to be a hint to you to be a bit more cautious with 9:30. Why? Because most of the time you're not going to get the same amount of significant volatility. You understand? And you need to find substance and choose which one is most likely to be the cleanest one. It's like you see on Friday, right? Not on Friday, Thursday, we had NFP and then we had the market open right after. For me personally, right, I wouldn't look to partake at 9:30 just after that large expansion that happened during 8:30. You understand? Unless I am able to identify that it is in sync with a fixed high time frame bias, like the daily bias. That's when we start talking about first stage distribution and second stage distribution, right? The minute it becomes opposing directions, right? Where 8:30 is bullish and then 9:30 is telling you something else, right? That's when it becomes problematic because it hints to you that you're trading within a range, right? And the substance of volatility might not be as easy to identify or get involved within. Am I making sense, big man?
Yeah, so it's only okay to trade 9:30 when it's aligned with the higher time frame means, so the 6 hour session.
Yes. And that's only if, right? That's only if the 8:30 initiates direction, right? That means
First.
your easier trades, right, are always gonna be 9:30 continuations that begin at 8:30. Meaning it's gonna be your easier trades are gonna be from your 90-minute cycle. Your 7:30 trades bleeding into 9 a.m. Does it make sense? 7:30 to 9 a.m. That's a 90-minute cycle. When it initiates direction, right? You would want to see 9 a.m. to 10:30 be a continuation of that. Those are gonna be your easier trades. The reversal ones are gonna be very problematic if 8:30 had large volatility. Does it make sense?
Yeah.
You guys are not confused by her, right? Okay. And also in simple context, what I'm trying to say is your easier 8:30 trading days, right? I mean, your easier 9:30 trading days are gonna be the ones that are not overlapping with too many red folder news events, right? That's what I'm saying. This week has less red folder news events, so it's a type of week where the market open can be allowed to shine. You understand? That's basically what I'm trying to say. Just because there's no red folder news events, it does not mean there won't be volatility. It just means you'll have an easier chance, right? And a more fixed approach into trading the market open. Because you only need to focus on two things, either the market open volatility or session volatility, right? That's extended volatility. It's only two things. It becomes problematic when there's a lot of factors that are coming into a trade. It becomes very, very problematic. You guys understand, right?
Yeah.
Okay, perfect. Okay, big man, could you please go into the current week again? Okay, perfect. Could you now try to reanalyze the weekly forecast in regards to what we just initially said?
So Monday,
Yeah.
I would trade 9:30, and it would be high probability because there isn't any other red folder news driver that's affecting
Yeah.
9:30's volume. Same with Tuesday,
Yeah.
and I guess it would be the same Wednesday and Thursday if you're saying
Yeah.
these are less influential. So for the whole week, I would trade 9:30.
Yeah, I would say the
And
worst
outside that time,
9:30 to focus on is gonna be on the Wednesdays and Thursday. So those for me would be regarded as a problematic days out of everything. Monday, we could also say because at times it tends to be highly accumulative, right? But that's still yet to be seen. But the problem is with Wednesday and Thursday, right? Since they are red folder news events, is the fact that the volatility tends to be very lackluster, you know. So the only time I would consider trading Thursday is if we have a really really weak 8:30. You understand?
Oh, okay,
And
cool.
then with
Yeah.
Wednesday, right? You could trade it, but understand that it could be very problematic ahead of the red folder news event. So
Pre-market.
your highest probability trading days, right, would be outside the calendar days. It makes sense, right?
Yeah.
Okay. Is anyone confused there?
So I would like to further elaborate on this subject.
Okay, perfect, big man.
My question is, okay, let's say the news event itself is less favorable.
At what time?
But if you, let's say, let's say the FOMC meeting, I mean,
Yeah.
it's not very, doesn't tend to have a lot of volatility and so
Yeah.
on. But what happens, for example, if on a time-based perspective,
Mm-hmm.
the the place that the price opens at 2 p.m. is very very directional
Yeah.
towards short. For example, let's say look at the 90-minute bias. You're in like a 5 points distance from the top one and 100 points distance from the bottom one.
Yeah.
And this like being catalyst for a stronger reaction.
I need you to rephrase that part when you say 5 point and 100 point.
Like, can I see? Can I
You're gonna
share
show
my
a chart.
screen for a second? I'll share my screen.
Okay. Okay. Thank you, big man.
Can you see?
It's loading.
Let's imagine for a second.
Yeah.
Can you see it? Let's imagine for a second that this is 2 p.m. on that day, okay?
Yeah.
And let's say for the 90-minute bias was something like this. Never mind the exact numbers.
Okay.
Something like maybe like this.
Mm-hmm.
Okay?
Yeah.
So when 2 p.m. opens here,
Mm-hmm.
it's very, like the long bias is very strong.
Yes.
And can this help price to spool in a more violent way to the upside?
For the rest of the session, or specifically 2 p.m.
No, specifically for the news event, for the red folder event.
Okay, big man, okay, could you please remove the large impulsive candle? Just do a bar replay before this one. Okay, so you're saying basically based on the distance of this time-based PDAs, right? Price can be allowed to
here
move.
we have here
Yeah.
6 points,
Mm-hmm.
and here we have 140 points.
Okay.
I'm saying that if we're so close to the bottom one, it's like a very, very strong spring, you know?
Yeah.
I'm thinking,
You know
maybe I'm
what the thing is,
mistaken.
right? I think I'm understanding what you're saying. So since there is like a PDA that's closer in proximity, right, by a significant amount, meaning it's initially more dominant, right? Can it allow price to move way more exaggerated, right, from like a more exaggerated distance? I would say no in this case. Why? Because the problem is the alignment of volatility, right? The only thing that's present right now is time alignment. You understand?
Mm-hmm.
You need volatility to get up there, right? And if the red folder news event lags that, that's when it's not going to move. That's why also, big man, I'm gonna need you to remember this part, right? There's gonna be times where, okay, let's say you see that orange candlestick that you've marked out.
Yeah.
Let's say that is you're about to trade 8:30, right? We'll just say you're about to trade 8:30. Let's say that is 2:30 p.m., right? I think that's it's a 6 hour cycle look back, I think, right? 2:30 p.m., right? If You
Yeah,
are, and
no,
then
it's
the
three
purple.
hours.
Yeah, that one.
This is 3 hours.
No, I'm just giving
Three
an
hours.
example.
Oh, okay.
Yeah, I'm just giving an example, right?
Yeah.
Okay, I think I'm just gonna use this term. Okay, that current candlestick that you mark, the next candlestick, what time is that? That's 9:30, right?
Yeah.
The one that's about to play next, and then this is 6:30, right?
Yeah.
Okay, perfect. Now let's pretend you see the purple one just right before the orange one. Let's pretend that is 9:30, right? 9:30 a.m. from the previous day, right?
Mm-hmm.
Okay. So right now we're about to have some form of a rate folder news event, right? At 9:30, like
Yeah.
right now, right?
Yeah.
And there's a lot of volatility that's about to get initiated with it, right?
Mm-hmm.
One thing you will need to understand, big man, is sometimes, depending on the amount of volatility, that's what makes it tricky because you won't know how much volatility there's going to be, right? It's going to tend to wick beyond your 6:30 candlestick and visit the 9:31 and then distribute to the upside. You understand?
Yeah. Yeah.
Why? Because of high volatility price distributions, right? They tend to like to refer to bigger cycles.
I
That
see.
that's why you'll even see, like, even with me, this
Actually,
would
there
happen.
is a very good example from
Yeah,
this day.
yeah. Even with CPI, the CPI, the NFP that we had on Thursday. My only problem was with it was the fact that we didn't have the wick on the normal NQ, right? And it was only present on the MNQ. You understand?
Yeah.
But you
Yeah.
understand what I'm saying in regards to the significance of time-based PDAs and volatility.
Yes.
That's why.
You have a perfect example for that here.
Okay, let's see it.
You were, I don't know if I mean, you can see here this one wick into this one as well.
You see, and it just cut through, and you'll find that you, on that purple line, right? You will find that you had refined that purple line to the 1 minute time frame, right? And then price just cut through it. Let's just see.
Yeah.
That's always gonna happen when there's like a very large amount of volatility, you know.
Yeah.
So for me, most of the time, right, I do take the trade, right, with also the understanding that I could be exposed to that possibility happening, right? I'm not willing to move my stop to 2 PDAs, especially if it's too large. Does it make sense?
Yeah.
I'm not willing to do that. So that
Yes.
means I'm willing to endure the loss, right? It's even the same with NFP, the one that happened, right? Initially I went long, right? I had 2 PDAs marked above, right? And then price gave me like a minor displacement to the upside, right? Meaning it moved maybe like I would say a significant amount, right? For me to try to move my stop a bit tighter because I wouldn't be willing to allow price to go back any lower before it can move to the upside, right? And then as soon as I did that, right, price dropped and gapped and opened just right below, touching my stop, right? Just below my entry. And then when 9:30 hit, right, just a few seconds later, it completely went to the downside. You understand? To approach a way more significant PDA than the one that I had initially outlined. If I had not done that, that means I would have pretty much been exposed to slippage, meaning I would have lost way more than I was willing to. You understand? Because the way it moved, right? It was a point of a millisecond. You understand? But I understand that at
Yeah.
times I'll be exposed to that risk. It's not things you can avoid. It's the tax you pay to be in the industry. But you understand, big man,
Yeah.
large
I see.
expansions and large volume distributions demand way more significant time-based PDAs. That's why you'll have an easier time, right? Trading the bigger cycles for more significant moves, right? But when it's days and weeks where you have less volatility, that's when they become problematic. Why? Because price tends to want to respect everything. You guys understand, right?
Yep.
Okay, perfect. Does anyone in regards to the calendar so far have any questions? Is anyone confused anywhere? Just okay. I'm assuming that everyone is pretty good in regards to this right here, right? Does anyone want to share their bias for the coming week, so I can try to add on in regards to that for what they're looking for from a price-based perspective?
Don't mind if no one wants to go.
Okay, let's go, big man. Let's go. Let's go, brother.
Yeah. Let's go.
I hope you got it. Okay.
Okay, so I don't have anything marked out right now, so I'm
Okay.
doing this together.
It's all good.
Okay, so we're currently in week 1, right?
Mm-hmm.
This month. All right. So I'm just gonna use the closest week 1 that I can possibly see.
Now we're gonna be in week 2.
Yeah, big
or
man. We're
week
gonna
1?
be in week 2 now.
So we're in week 2, yeah?
Yeah. Okay. I want you to start this from the monthly time frame, big man,
Fine.
so you can have more substance. Okay. Okay. Okay.
Anything else I need to change on you?
Okay. Now we can live like that for now. Okay. Okay. So right now we're in July, right? You would agree?
Yeah.
Okay. What is the semi-symmetrical time-based month that we utilized last month for June?
Is it December, isn't it? December.
Perfect. So for July, what would it be?
January.
January.
Nice.
Perfect.
Okay, now January.
Okay. So now just try setting the indicator to identify Jan on the month.
ID.
On the month. See where it says July? Yeah. Yeah, just have it set to Jan. Okay. So you guys would agree that this is your closest in proximity, right?
Yeah.
Okay, perfect. Okay, so yeah, you can continue, big man.
Okay, so because we're above this month currently, I'm gonna say that we're bullish for the month.
Yeah.
And from here, I want to go down to the weekly time frame and make sure that the weeks within here stay bullish. So as long as we're above these weeks throughout this month, I'm gonna continue to be bullish. Changes to the weeks now.
Okay.
So we're looking at every week too, right?
Yeah. You'd first look for the one within the month.
Yeah. So this is the week from the month that we picked out.
Yeah.
Not close to price. So these are the ones that I'd be looking at prior to this one.
Yeah.
Okay, so I'm just gonna use this one.
Okay.
So from here, I want to go down to the daily time frame, and I want to see that the days, see that we're above the days.
Okay.
So I want to stay above these throughout the whole week or majority of the week.
Okay, perfect. Okay, so just try, big man, could you try marking out the high of that range? Okay. Could you mark out the Monday, the Monday, your candlestick, the Monday, right? Okay, perfect. That's Monday, right?
Yeah.
Okay, perfect. Okay, now I just wanted you to mark that one out, and then you're saying as long as you stay above that dealing range.
Yeah.
Okay.
I'll be bullish.
Okay, perfect. Okay, so today, I'll say Monday, our points of interest will initially vary, right, in regards to what we're gonna be looking for, because it's gonna be dependent on where and how price gaps, either above or below, right? Nathan, you see how price currently is, and everyone, right? this is an initial indicator to you that all the PDAs that you're going to have to be referring to, right, they all have to be above this red level. You understand?
Mm-hmm.
The closest in proximity Monday to now, which one would you say it is? It's that one.
This one right here.
Okay. So
Yeah.
as long as price opens above that one, right, you could initially say you're still bullish, right?
Yeah.
And this would align with your monthly bias, right? Which is January for July, right?
Yeah.
And it would also align with your weekly bias, right? Which is week 2 December for week 2 July, right?
Yeah.
It's just not utilizing those specific days within the PDAs, but the ones you've selected, right, are in alignment with what you're looking for, right?
Yeah.
Okay, perfect.
The close range PDAs.
Okay, perfect. So, could you try to zoom into the current price?
What you mean?
Yeah.
Like this?
Yeah. So, let's say price later today, right, or Monday. If price was to open where the current candlestick closed, what would be your bias?
Opens above the drill.
Yeah.
Below the drill.
Yeah, it opens above the trove. Yes.
I'd look to use this day. I'll find the PDAs within this day aligning with the bullishness. So I look for higher prices.
And then your points of interest would be?
Would I have to 2 times the range?
No. Okay, let's just use liquidity for now. The most recent liquidity.
Okay. So
Yeah.
This high.
That range right there. Okay. Now, within that dealing range, what PDAs would be problematic?
This dealing range?
Yeah. From that blue extending to current price.
Just the
Okay,
internal
symmetrical
PDAs.
day.
Okay,
The
so
internal
you
PDAs.
even the semi days, the semi-symmetrical days. Okay, what's the semi-symmetrical days of Monday?
Wednesday.
Okay, Wednesday and
Friday.
and Friday, but we didn't have Friday. Oh, we did have Friday. Friday is mixed with Monday, I believe, right? That's why this candle looks this weird because it says the 7th, right? Okay, B-Man, could you please mark out Friday's true open on the lower time frame? Because on this candlestick, you're not gonna see it.
6 hour or 15 minute.
Yeah, even the 15-minute is fine. Okay, and then now. Okay, remember it. Okay, that's the beginning of the day, right? And then, okay, that's the beginning of the day. What would be the true day open? The end of Asia and the beginning of London, right?
Yeah, right here.
Okay, perfect.
Jones Market.
Yeah, that's the one. Okay. Now let's go to the daily time frame.
You want these visible?
Yeah, you could. Yeah, on the daily time frame. Yeah. Okay, and then yeah. Okay, still not visible. I think you'd have to extend them a bit more. I don't know. Yeah. Try going higher. Okay, perfect. You can even remove the one above. It's fine. Okay. No. Yeah, I think. Yeah.
That's fine.
Yeah, it's fine. Okay, now let's go to the daily. Okay, so we would pretty much say from this red line going all the way down, right? That's pretty much the Friday candlestick. Would you agree?
Yeah.
That is where it is.
What's
right?
that?
from the red line,
Yeah.
right,
Yeah.
going all the way down with this candlestick, that whole entire range, that is Friday's data dealing range.
Yes. Yes.
You guys understand that part, right?
Yeah.
Okay. So, big man, you would say Monday, right? Yes, hinting to you that we're looking for higher prices. So as long as price opens above the true open, right? And you'd say the
Yeah.
semi-symmetrical day of Monday is also Wednesday, right? Could you highlight Wednesday too? Wednesdays, yeah. Okay. So that too is in support of higher prices, right?
Yeah.
So now overall, so far we're bullish, right? Monthly time frame, your checklist bullish, right? Weekly time frame, your checklist bullish, right? Depending on how the gap opens today, right? So far bullish, right? But now Friday would be regarded as what? Our problematic time-based PDA. Does it make sense?
Yeah.
That means, guys, in this given case, if you want to stick wholeheartedly to your bias, right, which I would highly suggest, right, is it means you're going to ignore every execution that's hinting you lower prices, right, because it's only driven by one cycle, which is the daily. The other ones are in confluence with the monthly, weekly, and the daily. So that's why we're regarding that one as problematic, meaning it could use Monday to take us to the upside, right, but fail to go above that true open, only for Tuesday to revisit Tuesday and then continue spooling to the upside. Does it make
Makes
sense?
sense. Yeah. So if we are reacting from Fridays,
You would not want to take a trade off
is,
that.
is that not enough to take a trade? Like, is the
Okay, let me
purely
put like
because
this,
it's on the
Nathan.
day time frame is not
Let,
influential?
let me put like this. There's some students like within the group, right? They say they are unable to take trades if it doesn't align with their bias, right? For me, I would try to counter trade this, meaning I'll utilize Friday to potentially target Monday, right? But those are going to be the harder trades, right? Because you have less things that confirm your idea. Does it make sense? So for me, I would consider the trade, right? But pretty much I'll try to reduce risk. Somehow, some way I'll try to reduce risk because I understand that this one is not as high probability or as significant as the one I'm looking for higher prices. Does it make sense?
Yeah. But
Okay. Unless price was just to open, right, immediately right here and then invert the AM session of Friday. That just confirms everything. Then now I can continue looking for higher prices. I even utilize Friday's AM session range, even though price is below the open. Does it make sense?
yeah, I got you.
Okay. So this specific logic, right, I'm trying to provide to the ones who only want to take trades that are in alignment with their bias. You understand? So
Yeah.
Monday is bullish. It's in support. It's in sync with the weekly and the monthly time frame. Friday is problematic, meaning it's the only problematic time-based PDA that's not gonna try to allow that's not gonna try to allow price to reach your draw, your point of interest. You understand? That's pretty much what I am trying to say. It's even better if Friday can just drive price to Monday and then spool to the upside. That completely changes everything because I wouldn't regard that as problematic anymore because its narrative has already been utilized. You know? Does it make sense?
Yeah.
Okay,
You made a
perfect.
video recently,
Mm-hmm.
not to change topic, it's too tough, but you made a video recently talking about the WIC confirming that the move has started.
The wicks.
Do you remember?
Oh,
Yeah.
you mean when I start stating things like this low should stay untouched and stuff?
Yeah, yeah.
Was it off
Is it
the
similar traits?
distribution? Huh?
I'm just saying, is it similar traits on the daily time frame?
Yeah.
So we'll, for example, Monday starts the distribution, the
Yeah.
week
Yeah,
will
pretty
tell
much. And
us.
then you expect Tuesday's true open to stay untouched. You understand? when Monday is utilized, and then everything else should just be an executive distribution to the upside. It should spool and be in sync. That means if the distribution is going to start on Monday, right, that means Monday needs to create the low of the week of this specific Monday, the blue one. Does it make sense?
Yeah.
So it's pretty much the same logic. Pretty much the same logic. What worst case scenario here I believe we'll get right is just time distortion between Monday and Friday's dealing range for tomorrow. But I trust Monday a bit more because it's a symmetrical PDA, right? Friday is semi-symmetrical. It has influence, but it's not as significant as Monday. So yes, it's problematic, right? But I would still bet on seeing higher prices over shorts for the whole entire day,
Also,
not just the AM session. Yeah.
Also, so regardless of who's bullish or who's bearish, because some people might have a different outlook or might just see a bullish PDA, and some people might see a bearish PDA.
Yeah.
That doesn't matter until how can I say this? We've got to go down to the 6-hour time frame, 3-hour time frame, and 90-minute regardless.
Yeah, you still have to do that regardless. Yeah, because you know what's gonna happen.
Yeah.
Okay, Nathan, could you open the text thingy? Could you like paste it on the chart? Yeah, and then just place it in the open area, and then just start putting in the time frames, and then we're gonna type them one by one. Right. I won't try to do too much, but yeah. And then just write 24 hours, which is the daily time frame. Okay, and then just on the next column below, just 12. Yeah, let's say 6 for the session. Perfect. And then 90-minute. And then we'll say 15-minute time frame. Right? Okay. Now try saying, okay, we won't go any lower, right? Just to avoid confusion. On the daily, say bullish. Okay, and then on the 6-hour, say bearish. And then on the 90-minute, say bearish. And then on the 15-minute time frame, say bearish. Okay, now I'm gonna ask you guys. Let's say these biases, right, were initially found based on the PDAs that you had found, right? If we're about to have a Redfield news event right now, like CPI, would you be bullish on the trade or bearish? And I want you to tell me why. Anyone can try this.
I think bullish.
I'll go bearish. I'd go bearish as well.
Okay. The answer is pretty much going to be bearish, right? Why? Because 8:30, the Redfield news event, big man, is in sync with cycles and time frames that are initially higher than it. You understand? It doesn't mean you being bullish is incorrect, right? It just means it's not yet confirmed. Because what initially happens within cases like this, right, is that the answer, yes, is bearish, right? Price is only going to drive time is only going to drive price to a PDA that later aligns with the daily bias. Meaning, as you refine your time frames, right, that's what's going to dictate the direction in which you are trying to take. So if the 15-minute time frame for you, big man, was bearish, but the 24 hours bullish, right? And you want to be in sync with the daily time frame. That means CPI for you would not look to trade it. Why? Because it has not been confirmed. And what I mean by this is you can visually see that the 15-minute time frame is saying we are bearish, but the daily time frame is saying we're bullish. It doesn't mean enforce a long just to be in sync with the daily bias. No, you wait for price to get itself in sync and then you partake. So try to always make sure that the time frame that you are doing your execution, right, should be initially the same ideology as the time frame higher than it. Meaning, if you're to trade on the 15-minute time frame, make sure the 90-minute is in sync with that. 90-minute, 6 hour. You understand? 6 hour daily, because the daily bias confirms the daily time frame. Meaning, we're bullish for the whole entire day, right? The 6 hour confirms what? The session. That means we are bearish for just this session, right? If you're bullish for the day, right, and the AM session is telling you that we are bearish, just wait for the PM session. Does it make sense? Just wait for the PM session to tell you if we're bullish. If not, then you will have not taken any trade that you would initially have to force. You understand? So you need some form of alignment.
You
in
always
regards to the time
wait for
frames.
all of the time frames to align?
It does not necessarily have to be all. It just needs to be the one above the time frame you're trading. The reason I say this is because.
Need to be the 6 hour.
Sorry, Nathan?
If you're saying if you're trading the 15 minutes, you need the 90 minutes.
Yeah,
Be
I'd say at least the 90
understanding
minutes
the
should be in sync with that.
Yeah.
And also, what I mean by the 90 minute, I mean a cycle bigger than the one that you're initially utilizing for a trade. For example, let's say you were trading the 15-minute time frame of the 6 hour cycles, right? Try to also make sure that the top hour cycles are also bullish. That's what I mean in regards to the time frames in correlation with the lookbacks. Always make sure that the cycle bigger than the one you are pushing a button on is also in sync with what you're looking for. Those are going to be your easier trades. The type of trades where you only take based on one specific PDA, like everything else is telling you you're bullish, right? And the smaller one is telling you that you're bearish, and you take that trade. Those type of trades, I'd say they're the harder ones to capitalize on, because what you're going to expose yourself to, right, is you're going to stay within the trade for way too long, and the price initially begins to invert and get itself in sync with the higher time frame cycles and time frames. Does it make sense, guys?
Yeah, so if I'm trading
Yeah.
5 minute, do I want 22-minute cycles?
Just try to make sure that the 45-minute cycle is also in sync with that.
Yeah, okay.
It makes sense, right? Perfect.
Sure.
Perfect.
Can I ask a technical question?
Yeah, big man.
I'm pretty sure you did a fair amount of backtesting, right?
Yeah.
How did you go about it? Did you do it like manually? Did you have any
For me-
coding assistant, Excel assistant?
For me, big man, I pretty much do all these things alone, right? Sleepless nights, right? I'm not saying I'm above average or anything, right? I'm just saying I'm involved within this markets, right? The most crucial thing for me, right, in regards to, especially with this type of trading, right, was performance. And the only way I can improve in performance is by me forward testing. So above just going through historical data, because I believe historical data, right, is good for understanding a concept, right? But it's completely different when it comes to implementing it. Understand? You're gonna see even most students, right, the newer ones, they initially will understand the logic and see the consistency, right, with it from back testing and everything. Even when I start breaking down, it starts to make sense, right? But from a performance perspective, that's the part that's gonna lag. Why? Because you've not seen it happen live multiple times. So for me, big man, I'll always stand for forward testing above back testing, because back testing
Yeah, that's for sure.
creates you're saying, big man?
Yeah, I'm asking more in the what I believe is the most
Yeah.
time consuming part
Mm-hmm.
is building your bias, right? And if we go about the bias building as a
Yeah.
pure technical issue,
Mm-hmm.
which is, I'd like to share an idea. If I can.
Okay.
I'll share my screen.
You can try sharing your screen, big man.
Okay, because I did a lot of Excel work and stuff. So
Mhm.
I'll share my idea and you can tell me what you think, okay?
Okay, perfect, big man.
So
Right, you're sharing
what
it
I did
on.
was,
Okay.
can you see my screen now?
Yes, loading. Perfect. Those.
Yeah, okay.
Mm-hmm.
What I did, this is not updated according to the logic that I learned from you.
Okay.
This is an Excel spreadsheet that shows all of the data information, in this case for the 3-hour candles,
Mm-hmm.
for NQ,
Mm-hmm.
and the 3 hours time frame for the 9 a.m. candle.
Yeah.
With some manipulation of, like formulas and pivot tables and stuff like this.
Mm-hmm.
So I input the date here.
Mm-hmm.
Okay, let's say
That's pretty good.
now January 20th, 25,
Yeah.
and it gives me a table of all of the distances. This is for the wick.
Yeah.
It's distance for the wicks from where I am, and
Yeah.
this gives me like basically like an initial bias, right?
Okay.
I need to refine it to be according to true opens and so on. And I can
Okay.
do the same for the daily, for the 6 hours, for the 90 minutes, and so on.
Okay.
But I'm interested in
Are this
hearing
based on
your
cycles,
thoughts
big man?
regarding. Sorry,
Are this based on cycles?
at the moment, no. But
Okay.
you mean it's based on days? At the moment, it's only based on
Okay. You
this
see,
case
in
is
this given
Tuesday.
case, right?
Yeah.
Okay. Just
Sorry?
okay. Please continue.
At the moment, this is only based on days, okay? So I can input weeks of the month, and this can show every in every breakdown you want. It can show on
Okay. I'll say
per
try
week, per
also
semi-week, and so on.
try also incorporating economic calendar events with this. Does it make sense?
Yeah.
Because you're
But
gonna
this
see.
is purely for building your bias in a more mechanical
Yeah.
and straightforward way that will be probably fast.
Okay, big man. I'm also
But
gonna
also
try
now-
to tell you something, right?
Yeah.
The most important thing, right? Most important thing, I personally believe, right? Understanding, right, is gonna be way more important, right? Than you having a
Yeah.
fixed approach in everything. What I mean by that is you're gonna you don't wanna always approach the markets with a fixed mentality or approach day by day. Why? Because you are gonna be completely blind to everything else. You understand? That's why you start hearing people say things like the algorithm has changed or this and that and that and that, but it's all still does the same. The only difference is the distribution and the presence of volatility. You understand? Higher volatility initiates higher moves. You understand? And specific models do not work within specific conditions like that. You understand? Lower volatility highly promotes what? Short-term trading.
Celebration.
Exactly, consolidation. And now, if you're going to have a fixed approach and you're unable to identify these specific conditions and these characteristics within the markets, right, you're going to be going in there blind, right? That's why you start hearing.
I'm not saying to use this for
No. I'm just like trying to add on also in regards to like. I'm just trying to add in regards to like the whole entire mentality, right? In regards to like trading, right? You don't want to have something that has a scheduled significant or a quarterly influence whereby now it works only 2 months of the whole entire year, and the other months it doesn't work. Why? Because you're unable to identify the type of volatility or the type of conditions you're within economically. You understand? So for me, what I would try to advise you to add in regards to this, right? Start also incorporating the economic events within your data, right? We'll keep it as simple as that. You don't need anything else. Just incorporate your calendar events and the type of weeks that these specific trades present themselves, and then you start filtering out and understanding which specific things tend to happen at which specific time. Does that make sense? But also,
Yeah.
okay, try, because I don't know if these are price levels or highs or lows of days. I don't know, right?
No, I'll tell you, this is purely for the bias. It's not for trading.
What is it
Because
driven
what
by?
I'll show you, okay? First of all, the data is not exactly like in
Okay.
TradingView because it was exported from NinjaTrader.
Okay.
But let's say you have a new day, okay?
Yeah.
Whatever the day is,
Mm-hmm.
okay? Let's say this is Tuesday, right?
Yeah.
So the way you go about it,
Mm-hmm.
this is Tuesday, right? So
Yeah.
first we go to the daily, we mark the daily open,
Yeah.
and then we look for the cycles. We said this is Tuesday,
Yeah.
Tuesday week 1, day week, so on and so forth. No, this
Okay.
is week 4. This is week 4.
Mm-hmm.
Okay, so we did this and we go ahead and we mark, let's say we mark this one
Yeah.
and we mark this one, okay?
Okay.
And then you mark the entire candle.
Yeah.
You do this and then you go to the 6 hours and you mark it on the 6 hours, you mark the AM session open,
Mm-hmm.
and you do the same for the other day, right?
Yeah. Oh, this is pretty much what you're doing, big man. Okay, then.
I know. No, this is what I'm doing. So what I'm
Okay.
saying, that using like the table,
Mm-hmm.
I can just input. It's I can just input the daily open,
Mm-hmm.
right,
Yeah.
and the date, and it can draw all the lines for me like automatically.
Mm-hmm.
That's what I'm saying. Just like to help me build the bias quicker when I'm doing years of backtesting.
You doing that on NinjaTrader, right? Because I don't think TradingView allows it.
No. I export the data from NinjaTrader and I manipulate it on Excel.
Okay, I'm getting a bit confused. Okay, if we're to go to tomorrow, right? Tomorrow we are having we going into Monday. How would you approach it?
First of all, I'm not saying the table is not like programmed at the moment to do the bias the way you go about it. Okay,
Okay.
it goes only at the moment according to the 3-hour cycles and like only the same day,
Yeah.
not with symmetrical wicks and so on, and or semi-symmetrical wicks and so on. What I'm saying is, I want to build a table.
Yeah.
Okay, let's say I come to analyze the chart at 9 a.m.
Yeah.
for this day. Okay,
Mm-hmm.
so I tell the table today is the 20th of January,
No.
2025.
Mm-hmm.
The daily open because I need to update the table like every day or something like
Oh,
that.
I think I understand what you're
tell
trying. Oh,
You understand?
yeah. But now would you?
I tell her the daily open was this one.
Okay.
6 hours open was this one. The 9 a.m. open was this one.
Okay.
And then it goes inside of here and it builds the bias for me.
Oh, and then it would automate and tell you which
On the
one's in close
daily,
proximity.
on the 6 hours, and on the 90 minutes.
Oh, yeah, big man. That's gonna need a lot of data. I don't know how. I understand what you're trying to say, right? I just never thought of like doing it utilizing an Excel sheet. I think that's also why I was having a hard time with the lookbacks because I tried to code this, not this per se, right, but the look back logics for way more exaggerated and extended amount of time, you know. But I think I'm understanding what you're saying. So basically, you paste your current day price open, right, and then it would show you, it would build a bias based on the historical ones that are initially closer
Yeah.
to it.
For example, on this specific day, the 20th of January,
Yeah.
9 a.m.,
Mm-hmm.
I'm saying that the data is not exactly
It's spoofed.
what you see in the table.
Yeah.
Yeah.
Yeah, it's
It's
spoofed.
M and Q, okay.
Yeah.
Never mind. So let's say on this specific day, we opened here, right?
Okay.
So first of all, I just put 20th of January, 25.
Ah.
Yeah. So now it looks inside the table here and finds the opening price. Okay.
You even just gave
And
me.
it says
Big man, could you please send me this document? I wanna diagnose it.
Yeah.
Okay, please.
Yeah.
You just gave me like an
It's
idea.
not complete,
Yeah.
but
This
that now from here, yeah.
Yeah.
So I have this one.
Mm-hmm.
I have this one. January 7th,
Yeah.
and then I have let's say this one. Yeah.
Ah.
And these are the closest ones. This is only for the wicks. Okay,
Ah.
it's not for the open. I can of course
Okay.
change. Yeah. And this is on the 3-hour time frame. So this
Okay.
is like a bias based on the. Oh, sorry. So this is January 7th.
Mm-hmm.
Do that one first. Yeah. January 7th. January.
The problem is with this, you're gonna need really, really accurate data.
The data that I export from, like, I have a live data connection.
From NinjaTrader, right?
Yeah.
Okay.
From this one, it's here, January 7th. I took this one. I don't remember exactly what
That's all good, big man. I think I'm understanding what you're saying. You even initially just gave me a few ideas in regards to this. I'd say it's pretty
So I
good.
do
I
this.
just don't know how you're
Okay,
gonna try
this
to.
this one here, it took this one, okay?
Mm-hmm.
Yeah. This is for January 7th. And then for this one, this will maybe this will be disregarded, but let's say July 17th
Yeah.
for 24. July 17th.
Big man.
Sorry
24.
to interrupt you, but why do you need it? I mean, like, I still didn't understand why do
Because
you
if I want to do this process,
You know
on a
what it is,
daily
big
basis.
man. I think what he's doing is he has like the data of all the true opens of all the days, right? And then he just provides his document with the current day, right? And then it's gonna automatically search without it having to go into the chart, right, to identify the closest in proximity out of all of them.
Yeah, exactly.
You
But
understand?
yeah, you will still need to be on the chart to mark this.
Yeah, you're just gonna have to
So
confirm
I
it.
still don't get it. Why do you need to do this
Hmm?
job? Like,
Yeah.
because okay, you
Because I
put
think
it
that
there and then
if you do an analysis for a year of backtesting, and for every day you have to start looking for the
to be honest, to
closest day,
backtest,
and then
you should do it by yourself, not a bot doing for you.
No.
Because when you do it, you
no,
practice
I'm
your
not.
own eyes
I'm not.
and you practice how you identify things instead of trying to build a bot. So it's something different.
Okay, guys,
No, it's
let me
not
just
a
put it
bot.
like this, right? Because like this, we're even going off topic by a bit, right? Guys, backtesting and forward testing is two different things. Backtesting is for data and understanding that your data is present within the market. Forward testing, that's you learning how to utilize it. That's why you have people that know too much about the markets but still can't implement anything because they do not know how to. They understand how the theory works. That's why they tell you theory and practicals is two different things, right? But man, I would say this, right, is initially a good idea because I can see how it would like minimize your workflow, right? It makes it easier for you to like find the closest proximity work, like the closest proximity day, right? Without you having to manually look for it because you can be also vulnerable to making mistakes. You understand?
Yeah. Yeah.
but you still need to understand the logic behind time to implement it
Of course.
efficiently.
I'm not saying, of course,
Yeah.
I need to understand the logic, but if you are like short on time, yeah,
Yeah.
and you need to go and you want to go over a lot of data,
Mm-hmm.
and building the bias is like a tedious work,
Yeah.
and it's not purely technical. Okay, of course,
Yeah.
it's also an art.
Yeah.
But if like the main work is technical and you can, you know what, use 80%, like I don't know, save 80% of the time on this. It can help you a lot.
Okay. Please send me the document, okay, big man. I'll also try to diagnose it, okay?
Yeah.
Okay. I really appreciate it. Right. Okay, guys. Okay, back to the forecast. Is anyone confused anything in any way in regards to the coming week's approach? So everybody understands. Okay, perfect. I'm just gonna pretty much state that right, still doesn't want to share. Okay, big man, Discord has started again.
What did it start?
It's loading again.
What it's loading?
Let me show you. I'm gonna take a picture and then I'll send it on Discord.
Again with the stream?
Yeah. So it's just loading again and I can't click anything. And now let me show you. I'm posting it on Telegram, right?
Yep.
Okay. Okay, Nathan, big man, you still here? Is it still here?
He's here, but I don't know if he's like.
Because I just wanted to
On
see if he
the-
could share his screen. Okay. Okay, I wouldn't need my screen for this. It's fine. So you guys understand the daily bias so long, so far, for like the whole entire day, right? The monthly is bullish, right? January for July, right? Let me even type that. Jan for July, right? The weekly is bullish, right? It's gonna be week 2.
Are you sharing something?
No, I'm typing it down on Telegram because Discord doesn't want to share again. It's loading.
Wait. Here, Nathan just shared.
Okay, let's see. Yeah, I still can't engage on my side.
Just close the Discord and open it.
Okay, let me try.
Looks like I don't know. You have a lack of.
I think I'll try on the other PC because I just got another one. I just need to set everything up. Still doesn't want to close.
But Nathan sharing his screen, like what you told him to write.
Alright, guys. Wait.